Ladies and gentlemen, welcome back to the channel. Here in this video, we will be going over everything you need to know to start off your trading week in regards to Tesla stock, our markets, an update on the Middle East situation, whether or not that is going to play a major role in markets coming this week. I'll just tell you right now, probably at least the beginning of the week. Now, we will be going over all of your earnings, all of your economic data that will be coming out this week, different Fed speakers, as well as where you sit currently with Tesla stock. We'll look at the option activity, everything, like literally everything you need to know for this week. Hit the like button, subscribe to the channel because it's free 99. It costs you absolutely nothing to do so, and let's get started. So first things first, as I sort of mentioned in the beginning of this video, there's going to be a couple different forces affecting Tesla. We've seen on Friday, Tesla cut the price of FSD, likely going to boost the take rate. Some analysts believe 2 to 4x. So instead of a 10% take rate, maybe you see a 20 or 30 or a 40% take rate for the subscription of FSD. I do think this also puts it on the radar for hedge funds and institutions and big money managers to say FSD may actually be a subscription as a service business model that can grow large. At this price, there's a lot of value in FSD, and as FSD continues to improve, more people are likely to sign up, so on and so forth. And then Tesla's probably going to take the same approach that Netflix did and continues to do, Spotify and other subscription services, to raise prices as the product does get better. So strategy right now, get as many people signed on as possible, then you raise prices later. Wall Street loves subscription revenue because it's stickier, it's recurring, and, well, in the case of FSD, can have 90% net margins, 80 to 90% net margins, depending on who you ask. If you can grow that into a large business, that is a stream of profits coming to Tesla. So for obvious reasons, Tesla cutting the price of FSD, likely boosting the take rate, is a big deal, especially right now as you do have the free trial for FSD. That $100 a month is a pretty good value. It costs less than a coffee from Starbucks every day, and the car can basically drive you around anywhere with minimal interventions. I do think the take rate's at least going to jump to about 25%. I think that's a pretty good estimate, at least double at the bare minimum. So that is news that came out on Friday. You did see in deep extended hours trading, Tesla stock was up 1/3 of 1%. At the same time, the NASDAQ was down 1/4 of 1%. So you did see Tesla doing well as the NASDAQ was selling off Friday in after hours. Now, the second force that is going to be at play in Tesla stock and in the broader markets is obviously this Middle East situation. And last we knew, Israel was meeting with their war cabinet to decide whether or not they were going to respond to this latest attack. Let's be honest, they are. Okay, they're going to respond. Does Iran respond after that? Possibly. They did write a statement to the United Nations and said if Israel makes a quote-unquote mistake again, the response will be substantially larger. In my opinion, this situation is probably going to get worse before it gets better, but there is a chance that Iran just stands down and the markets would love that. And really, the markets don't care about what already happened. So that attack happened on Saturday. I think the markets will respond to it on Monday, but coming by Tuesday, if there's no escalation, then it might just be done at that point from the market's perspective. Now, we don't know the specific implications this will have for gold markets, for energy markets. We just don't know. What I will say is Bitcoin was trading at about $71,000 before this attack. Currently, it's at $63,000, even down about 1.5% today alone, because it was trading at like 1.3% positive. You're now negative 0.3%. So you've lost about 1.5%, but you're off of the lows. Bitcoin's a pretty good leading indicator that markets are going to be pretty red tomorrow. So specifically for Tesla, we do have these opposing forces, one of which was very positive on Friday, one of which was very negative on Saturday. What happens for Tesla? I think ultimately this situation in the Middle East will get worse. Maybe there's more fear, but inevitably it will get itself figured out. And the catalyst that we seen on Friday, Tesla lowering the price of FSD, sets us up in a big way for Tesla's earnings. And I think that's when you can expect larger upside. But from now until Tesla's earnings, I think it's most likely that you're going to see a sell-off in broader markets, especially in some of the areas of the markets that are maybe not priced for bad news. Let's face the reality. Let's stop bullshitting ourselves. Tesla is priced for bad news. Small cap, mid cap stocks, on a stock by stock basis, are priced for bad news. They're already trading at big discounts compared to where they were 12, 24, 36 months ago. They've priced in a lot of bad news. Meta, Microsoft, even Apple, Google, Amazon, AI stocks, they have not priced in a lot of bad news. They have not priced in the chance of bad earnings. They haven't really priced in anything. They're priced for perfection. Those areas may get hit a little bit more off of this Middle East situation. Well, not to mention, because if the price of oil does go up, you're probably going to get Fed officials saying, hey, this is very uncertain based on what energy could do to inflation, but more importantly, what rising gas prices could do to the economy. The Fed is begging for a reason to start cutting rates. In this situation, if it does have a big impact on oil markets, on gasoline prices, this could be the catalyst the Fed has been waiting for this entire time. Now, I got quite a bit of backlash from the last video suggesting this Middle East situation, if it does spiral and cause gas to really shoot up in price, that would not cause the Fed to cut rates. That would actually cause the Fed to raise rates. 100% false. 100% not true. Inflation, core PCE year over year, is at 2.8%. Okay, so common economic practice, common Fed practice is to get the Fed funds rate above the inflation rate. Fed funds rate, call it 5.25 to 5.5%. You are well above the current year over year rate of change of core PCE inflation. The Fed could cut rates 8 times and still be above the rate of core PCE inflation. So think about it like this. Gas prices going up is a huge restriction on the economy, a huge restriction on economic activity. If the average family spends, anywhere from 7 to 12%, 15% of their salary on gas, yeah, if that goes up, that's a problem. That really eats into money that people can spend out there. And at this point, the Fed is more worried about the business cycle, the economy, and jobs rather than, what oil markets are going to do. Something the Fed cannot control anyways. The Fed can't control what the hell happens with oil. No, if the price of gas went up and put a restriction on the economy, the Fed will start cutting rates. They are begging to start cutting rates. They just don't have a reason. They don't have any reason to start cutting rates. And that's why they're not right now. Give the Fed a reason, like gas prices shooting up, the Fed will start cutting rates. It's obvious. The writing is on the wall. Does this escalate? Does the price of gas go up? Does oil continue to go up? Probably, but we don't know how much for sure. A small increase, not going to be a big deal. A large increase, that's a big deal for the Fed, and that's the reason they're looking forward to start cutting rates. I would also mention it is an election year, and while the Fed likes to say that they are independent from the government, independent from politics, they are absolutely not. And they're already facing a lot of pressure from both sides of the aisle, really, to start cutting rates. And if gas prices go up even more, then you're going to get more calls on the Fed to start lowering rates. Now, you could also make an argument that obviously the Fed reducing rates or having a reason to reduce rates would be a big positive for Tesla, small mid-cap stocks, really your interest rate sensitive names. But you could also make an argument if the price of gas at the pump does go higher, there's going to be a lot of interest into EVs, just like there was an influx of interest in EVs back in 2022. And I think this time would likely be no different. So keep that in mind. This could actually be a positive medium-term catalyst for Tesla stock. But with that said, overall, my expectation for this week, we'll talk about the actual price action I'm expecting when we get into the technical portion of this video, but I am expecting at least downside on Monday. If the situation gets worse, if there's more threats of retaliation or outright retaliation, a retaliatory strike by Israel on Iran coming Tuesday or throughout the rest of next week, that will catch the market's attention again, and you would likely continue to see a sell-off. But it's almost a guarantee Monday is going to be a pretty red day. Tuesday and the rest of the week, I think that's a bigger toss-up. The markets will price in all of the bad news on Monday. But again, I'm really not expecting huge upside, like 200 plus, until after Tesla's earnings. But this whole situation could end up being a big positive for Tesla if the Fed does take this as an excuse to start cutting rates, while also giving Tesla a little bit more search activity and overall interest because of gas prices rising, which is my expectation at the bare minimum. Gas prices will likely go higher. We also see in Israel, or Iran did take an Israeli part-owned government ship, and they seized it in the Strait of Hormuz, which is a major choke point, the largest choke point in the world for the oil supply, and that may cause a little bit more fears that maybe oil could be restricted, which will have an upside effect on oil prices coming tomorrow. Now, as far as heading into this week, as I have mentioned before in most videos now, Tesla has the highest short interest you have seen in many years, sitting at 3.9% short interest of free float, with almost $19 billion currently sold short, and that is Tesla stock at 171. For every $10 or so, short sellers are going to lose over $1 billion because there's 108 million shares currently outstanding. So if Tesla stock gets back to, $200 or so, the shorts are going to be down almost $4 billion. That's kind of insane. And I think you're at a breaking point as far as the shorts. If Tesla stock does rally from here, it could get aggressive. But again, I expect that a little bit more after Tesla's earnings on April 23rd. And it wouldn't surprise me if people do short more Tesla heading into April 23rd, because Tesla sold off 10% after the last 4 earnings. The question is this going to be another earnings that Tesla really declines, sells off another 10+%, a outright statistical anomaly to sell off 10%, 5 earnings in a row? I think not, but I do think a lot of retail investors are going to head into this week and especially next week as Tesla reports earnings, expecting Tesla stock to fall big after earnings. I think that is where you have an opportunity to take the long side of Tesla stock heading into earnings. And we'll see. Maybe we do get a large gain. And we called it out here on the channel. Friday in Tesla, you did have unusually bullish option activity, especially around 2 p.m. when I start making those videos. It was 94% positive in the options market for Tesla. You ended up closing the day on Friday with 515 orders totaling $1.26 billion and a positive order value of 68%, which still ended the day very much abnormally bullish for Tesla. And then we got the news that Tesla was cutting the price of FSD. Putting 2 and 2 together, that would say big money is looking at that as a positive catalyst. Coming this week, we will have a bunch of banks reporting earnings, including Goldman Sachs tomorrow morning, Charles Schwab tomorrow morning, Bank of America Tuesday pre-market, Johnson & Johnson, obviously not a bank, but still a well-known company, Morgan Stanley, PNC, BNY Mellon, Bank of America. I really am focused on what the banks say about the state of the consumer. JP Morgan sold off over 5% on Friday based on their guidance for their interest income. People were expecting them to guide up, suggesting loan demand and lending demand was going to continue to grow. And JP Morgan basically said it's not. It's going to be pretty much flat. And the market's seen that as the consumer maybe starting to take a, foot off the gas pedal as far as spending and lending. Not a great sign to start off earnings season, what we had on Friday, but this week's going to get a lot more extreme, especially Bank of America. That's going to capture a huge portion of the U.S. banking economy, right? PNC as well. You're going to have a pretty good understanding of where the consumer is at. ASML, high-flying AI stock. That one will obviously be important for the likes of NVIDIA, SMCI, AMD, Intel, Dell, all of your quote-unquote AI stocks these days. And then, and that's Wednesday pre-market. Wednesday after hours, Alcoa, software name, Las Vegas Sands, Kinder Morgan, Discover, and other banks. obviously watch the sectors. Las Vegas Sands, that's going to be travel, right? That's going to be important. Discover credit names. That could also be important for evaluating the state of the consumer. Keep in mind, the only real bull thesis at this point is the consumer is spending money, and that's going to drive earnings growth. If that starts to become questionable, that's where I think you get much larger downside in our markets. Again, the bull thesis to start 2024 was inflation is falling off a cliff. Fed's going to cut rates 6 times. Consumer spending money. No recession. You no longer have 6 cuts from the Fed. You have maybe 1, maybe 2, but definitely not 6. So you're not getting support there. Inflation is actually rising. Not getting support there. Now you have these geopolitical tensions. Yeah, that's not great. But you still have the bull thesis of people are spending money, going to drive EPS growth. You can buy stocks. That could come into question this earnings season. That's where you get a potential 20+% downside in the NASDAQ or the S&P. I don't know if that's going to happen. It's a possibility, especially based on what we've seen from JP Morgan, Citi, and other banks on Friday. Thursday pre-market, that's going to be your big day. You have TSMC, Nokia, Blackstone Group, KeyBank, Alaska Airlines, and Ally Bank. And Thursday and after hours, your big dog Netflix, that's directly going to have a sympathy move to your other big tech names. Intuitive Surgical, PPG, and Western Alliance Bank Corporation. Friday pre-market, American Express, that one will also be important for evaluating the state of the consumer. So yeah, overall, I'm expecting a lot of volatility based on earnings. It's really going to decide whether people should be bullish on stocks or not. It is going to be a big week as far as economic data as well. On Monday, you don't have to wait too long for economic data that will move the markets. You have retail sales month over month. Last month, you came in at 0.6% positive. This month, you're expecting, for the month of March, you're expecting 0.3%. Again, that could be another reason the Fed would need to start lowering rates. If retail sales were to come in negative, that would be something the Fed would say, hey, maybe we should start thinking about cutting rates sooner rather than later. You do have Fed Daily that speaks as well at 8 p.m. on Monday. That could be important if retail sales come in, hot or super low, but typically those Fed speakers after market hours are closed don't tend to have too big of an impact. Tuesday, you are going to get building permits numbers coming out at 8:30 in the morning. That's likely not going to move the markets at all. If they come in much higher, maybe that means more supply of housing is coming, and that could be good for housing inflation, but typically that doesn't move our markets too much. You will get CPI out of Canada, which if that comes in light, that could be good news for our markets as well. You really don't have anything as far as Fed speakers that I can see here on the calendar, but calendar could always be missing something. On Wednesday, you are going to get the Fed Beige Book. That's basically a printout of the different Fed banks, right? Atlanta Fed Bank, you have Boston, right? You have Chicago, you have San Francisco, and Kansas. They'll say like, hey, this is how our district is doing. We're doing good in some areas, poor in other areas, and doesn't move the markets too much, but it can. Philadelphia Fed Manufacturing Index will come out Thursday, expecting that to come in at 3.8. Definitely higher, the better there overall. Fed Bostic will speak at 10 o'clock in the morning on Thursday as well. Fed Williams at 9:15 in the morning. Fed Bostic again at 4:45 p.m. And then on Friday, just Fed Goolsbee that speaks at 10:30 in the morning, and that's basically it. So your big data comes out on Monday, and that can make things, well, even more volatile for tomorrow morning. The 10-year Treasury yield will be something to watch pretty closely as well. If there is a lot of fear coming tomorrow morning of this conflict spreading, 10-year Treasury yields, all treasuries tend to be really risk-off assets at heart. When there is fear out there and people are concerned, people tend to put their money into treasuries as a bit of a hedge, kind of, I'll park my money here. It's not going to be as volatile, and if things do hit the fan, well, the Fed could cut rates, and my actual principal amount on the bonds, the notional value of the bonds, the price itself, could go up, and I can make a capital gain if shit does hit the fan, for a lack of a better word, which could cause 10-year Treasury yields to sell off like you've seen on Friday. They were down about 6 basis points. If things get worse, you could see a larger drop in 10-year Treasury yields, which could end up being a positive for a company like Tesla that trades a lot of which based on what the 10-year Treasury yield is doing, but just something to watch nonetheless. If we take a look at the bubble chart for Tesla, we do have the highest strike with the most amount of open interest is the $200 call, which is interesting. 51,000 for open interest. On Friday, you had volume of about 11,000, so there was a decent amount of activity around that on Friday. The second highest call is the 175 call with 41,000 for open interest and 45,000 for volume. So judging off of that, it looks like there is a lot of money, at least on Friday, that was betting on a rally for Tesla. The 170 call has open interest of 34,000 with volume of 22,000 on Friday, and the 180 call notably has volume of 37,000 with open interest of 37,000 as well. The 170 put, this is also notable, has open interest of 47,000 with volume of 38,000, but it definitely looks like there was a bit more call activity on Friday than put activity. And we can see for this week these contracts expiring on April 19th, you do have open interest of 56% calls, 44.3% puts. Volume on Friday, 55% calls and 45% puts. So you are a little bit more skewed towards a bullish reaction for this week. And if we take a look at the option chain itself at the 170 call, you have 47,000 or the 170 put, you have 47,000 for open interest. At the 172.50 expiring this week, you have 24,000 for open interest. And the 175, you have almost 41,000 for open interest. So if you do start to see Tesla stock actually move higher on Monday, not my expectation. I'm expecting Monday is going to be rough. I expect the end of the week could be a little bit better, especially if Netflix comes in with good earnings. You could start to see a lot of shares that need to be bought by the market makers. Essentially, 24,000 for open interest would be about 2.4 million shares that market makers would need to buy. 41,000 for open interest would be about 4.1 million shares market makers would have to buy. So you can see how this can really start to add up into a lot of buying pressure from the market makers. Now, it's not certain that's going to happen, but if you do get upside, that's what you're looking at. Now, again, the technicals on the triple Qs don't look great. That 0.25% drop Friday in after hours, that's what really caused you to fall under your 50-day moving average. It's almost a certainty. Monday is going to be a rough day as well. That is tomorrow. And I think that sets you up in a vulnerable position. If you don't find support here at 432 coming tomorrow morning, then you really don't have any support until you get down here to this 100-day moving average. And yeah, that just overall wouldn't be great. And then from there, I think it'll really depend what happens with earnings, if the bull thesis gets thrown out the window, or if the Middle East conflict does get worse and escalate into, again, gas prices rising, oil rising. That's, again, bad for economic activity when gas prices go up. And, when oil goes up, that is obviously bad for inflation. But if the Fed starts to talk about cutting rates again, some of that could be offset. But then again, is the Fed cutting rates for a negative reason actually positive for the markets? Probably not. On average, markets tend to fall about 23% following the first Fed rate cut, typically because the Fed waits until something breaks or something is wrong to actually start cutting rate. Now, Tesla on a technical basis, like I said in the last video, you really want to get above this yellow line here. I would have this plotted on your guys' charts. This is the 20-day moving average, and make it obvious because I think this is the most important level as of right now. To the upside, you have resistance around 178, then 181, almost 182, where your 50-day moving average is. Above that, 188, and then 200. 4 resistance levels that I can definitively say are resistance levels or will be that you need to break out above. So my expectation, you're probably not going to see a huge green week this week. It could actually be a negative week for Tesla because I'm not super bullish on earnings because all of these earnings that are reporting, your big tech, ASML, TSMC, Netflix, all their expectations are high. And I don't even have to look at the actual earnings expectations to tell you that because if you look at the stock prices, they're very high. Stock prices tend to be a pretty good reflection of expectations, and all of those stocks have done exceptionally well. So coming in, meeting expectations is not enough. You really have to wow investors if your stock is trading at all-time highs or close to it. to, justify the stock going higher. So I actually think this could be a negative week, and I think Tesla stock by the end of the week could really be settling down around 160 again. I think 160 is going to be a solid level of support, and I think you'd really have to see some kind of escalatory conflict continuing in the Middle East this week, or maybe earnings just coming in really bad to get Tesla stock falling under that. But if I were to set a price prediction for this week, 160 probably is going to happen. Now, could Tesla stock do well? Of course. Bad news is, if Tesla stock does do well, you have a strong level of resistance around 177 or so. And I'm not confident you're going to get enough good news or a good reaction, to counteract the bad reaction we're going to get in the markets to justify Tesla stock going higher than that. Of course, if the Fed comes out, they're super bullish, super dovish, talking about cutting rates, that could have a positive impact on Tesla, but that's not my expectation. The Fed's always slow to everything. Even if the Fed should be doing that, probably going to take them a while to start doing that. So let me know what you think about all of this information down below in the comment section. What is your expectation for this week? Hit that like button, subscribe to the channel. Thank you for watching. If you guys want to come trade with us live in real time, earnings season is my favorite season. That's the season you can make a ton of money with very small trades as well. Small trades can turn into large amounts on earnings. Definitely my favorite time of any year. Happens 4 times a year. And if you guys want to be a part of it, check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.